Welcome back to the watch list. We're watching shares of PulteGroup after its quarterly report. It's gone back and forth. It's near the unchanged line at the moment, but it did have a beat because it topped the earnings expectations on profit and revenue overall. We have a high interest rate environment still. It's relative to a few years ago at this point. The home builders have been doing well. I mean, Pulte has been a winner. Its closings rose. Its new net orders dropped a bit. Let's talk to Alex Barron and Jay McCanless. Alex Barron, President, Founder, Housing Research Center. Jay McCanless, SVP, Equity Research at Wedbush Securities. Jay, where do you rate this one in the group of home builders? This, as you know, home prices are still at record highs. Sales, when you look at existing home sales, are down for the fourth straight month. Where do you rate the home builders like a name like Pulte?
So thanks for having us on. We are neutral on Pulte, and in general, even though it's been certainly the wrong call of the group the last couple of weeks, we're still pretty bearish around demand, but more entry level and entry level builders, not so much Pulte. We thought it was a good report today, except they were light on orders. But did beat on EPS, so it's been a trend we've seen from some of the other big builders recently, is that orders have come in lighter than where consensus and our numbers were.
Yeah, I saw new net orders fell to 7,649 homes from 7,900 and change. The value of the new net orders did rise a bit, up 2%. But I mean, ultimately, you'd like to see the value rise and the number of new net orders rising. I mean, wouldn't that be ideal? Alex, some of your thoughts?
Yes, thank you. We recently had lowered our order expectations based on the surveys that we track. And so it didn't come too much of a surprise to us that the orders were a bit lighter than what the street was looking for. However, the earnings did come in stronger than expected, both due to better than expected deliveries and gross margins. So we kind of ended up raising our estimates going forward, and we feel we've been bullish pretty much since the beginning of 2023. And our main thesis has been that the public builders are gaining market share at the expense of the private builders. So even though the housing market itself may not appear to be very strong, the public builders have been having an edge over the smaller builders and over the existing housing market as well, because they've been offering the low market interest rates, and that's what's allowing them to continue to go strong.
Yeah, understood. You know, as you see the group, Jay, you said you have a neutral on Pulte. Do you have any buy ratings on some of the other names in the group, and why?
Not so much on the builders. On the product side, we do like Builders First Source. 75% of their revenues come from single family construction, and if we are about to see home building and housing starts take another leg higher, if the economy shows some improvement into the back half of this year and into 25, which I think is what the rally in the stocks have suggested. We like BLDR. It's a pure play on housing starts, both multifamily and single family starts. So that's a name that if you think this rally and housing start activity is going to be going up moving forward, BLDR is a name we refer to people.
And for example, you had Lennar at a neutral, right? And then D.R. Horton, another popular name, Jay. Just a quick thought on that.
Yeah, so we're still underperform rated on Horton. And the premise there is that we felt like the entry-level consumer was going to have a tougher time qualifying for a mortgage. We also believed, and we've talked about extensively, that there may be too many new homes for sale on the ground, forgetting the existing home market for a minute, too many new homes on the ground. We were worried that some of the builders might have to cut gross margins. Didn't actually see that out of Horton, but out of Pulte today, they did have to cut their fourth quarter gross margins. So we've been a little worried about the amount of homes that are on the ground and what the profitability of the sales that the builders and the closings that the builders are making, what that profitability is going to look like.
Yeah, understood. And Alex, I mean, when you look at the builders and their capabilities and abilities with mortgage rates and working with those, versus existing home sales. I mean, it seems sort of obvious why they're doing well with that. Any final thoughts in this environment where we, may expect the Fed to cut a bit?
Yes, well, we generally believe we're still in the early innings of a huge bull market ahead. With only 650,000 new home sales, as soon as the Fed starts to cut interest rates, we believe a lot of people who've been on the sidelines are going to re-enter the market, and a lot of the builders are poised to take advantage of that. I think it could play out one of two ways. Either the builders could just continue to offer, let's say, 5% interest rate, or some could even offer 4% interest rate. But either way, I believe that, over the next several years, the public builders are going to continue to gain market share, and their earnings are going to continue to grow that way. But, obviously what the Fed does is going to be a huge catalyst in the next few months.
Yeah, and we'll have new home sales out tomorrow, so we'll watch for those. Alex Barron, Housing Research Center, Jay McCanless at Wedbush Securities. Thank you both.